that payment to the trustee, and they'll pay all of your bills, your mortgage, and so forth, or whatever's included in that if you have a mortgage. And then when that's discharged, that means you've finished your time period. You're done. You're discharged. And they're saying they just had the discharge in January. Chapter 13 is a little bit weird. If you're still in the Chapter 13, like you're making those monthly payments and you can show that you've been making them on time, you can actually get an FHA mortgage while you're still in the Chapter 13. You have to be financially qualified, credit qualified. You have to get written permission from the trustee. But in a lot of times, it makes your situation better because rents can be higher, so than buying a home. Yeah, if it makes your situation better, they'll help you, or they'll write that letter for you to get the mortgage. The tricky part is, though, that once you're discharged, then the waiting period kicks in. So you've got a minimum of 1 year up to 2 years on that after the discharge. So you'd be looking at. You could hit me up at homeloansradio.com and we can look at your specific bankruptcy and see, it depends on whether property was included, some of the details as to whether you can look at it after a year with a manual underwrite or after 2 years with an automated underwrite.
All right.
Excellent question. Thanks for texting that into 77031. I mentioned earlier, bears repeating, the interest rates are low. If you've got a rate with a 4 or 5 in front of it, you need to be thinking about refinancing. You could be just wasting $100, $200, $300 a month. I put together a loan for someone this week. They've just been, they called me. They set up a time. They called me and they were like, all right, you're going to think I'm a fool, but I've had this mortgage for 10 years and I'm at a 6.5 rate. I said, okay, that's great.
You immediately mocked them, right?
No, of
course not.
Metaphorically gave them a hug over the phone and said, buddy, we're going to take care of this for you. So, and they have a pretty healthy mortgage and they great credit. There's literally no reason for him to just be sitting on that rate and paying that much more. Just doing a rate and term refinance saved him over $600 a month.
Wow.
And we dropped down and we did it as a 20-year term. We didn't go back up to a 30-year term. So they didn't lose any ground and saved him $600 a month. You too may be sitting on it. And the reason I say that is there was a study that came out recently that said 56% of people, when asked, don't know their interest rate. Go check it out. If you got a rate above, I'd say 3.875 right now, you can drop your mortgage, your mortgage percentage close to a point, if not more. With rates, the best qualified rates being down in the twos at 2.875 or for 15-year, down in the low twos. So if you want to find out what you can do, go to homeloansradio.com, hit the apply now button. We'll send you a quote in the email. Very simple, no hassle, no pressure. Just, hey, look at this. If you like it, let us know. We'll do it for you.
Cal says, morning beer guy here. He's on his way to Aquatica with the kids. So I don't think he means he's having morning beer. I think he means
I know who Cal is. Cal works nights and he is fond of coming home and having the end of the work day beer, which for him happens to be at 9 a.m. But
Cal says he was at the Monster Show. It was a blast. He had on a yellow WU shirt and love you guys.
Oh, wow. I'm sorry. I didn't connect with you and say hi at the show. I talked to so many people though, that really nice, all the nice folks at the comedy show that came up and said nice things. Nobody said anything. Well, people said ugly things to Fritz, right, Fritz?
Yeah. Well, I mean, one person clearly made it known they did not care for me.
Oh,
that's okay. That's all right.
You're talking about the one person that came up and said, "Hey, are you Fritz?"
Yes.
And then walked away.
Mm-hmm.
Yeah,
it's okay.
No.
Maybe they just wanted to put a name with a face.
I don't. Maybe they were drunk. Who knows?
But then you're supposed to say, "Wow, you're so awesome, Fritz." When they put the name to the face, they're not supposed to just say like, "Oh, okay."
Thanks for all the nice people that came up and introduced themselves, and it was nice to meet so many of you there. Yeah, that I've talked to on the phone or done mortgages for.
Right?
We've done hundreds and hundreds and hundreds, if not thousands, in the last couple of years. But that was a lot of fun. You could text in your question about anything having to do with home loans, to real estate, buying a home, selling a home, refinancing to 77031. You can also go to the website and click the button that says Give Don a Shout. That's homeloansradio.com. And that becomes a recording that we play your question on air and answer it.
We like those. Here's someone says, "Hi, I would like to buy a home, but I just started a new profession 10 months ago in HVAC. Did you say HVAC?
No, it's basically heating and air.
Right.
Yeah.
Before that, I worked in restaurants and went to trade school to do this new career. I'm making more money than ever, but not sure about the time on the job. I heard it needed to be 2 years.
Yeah. HVAC is how usually people say that. But so they went to school to learn that trade. And prior to that, they were doing what?
Restaurant work.
So And yeah, I think you could probably look at getting qualified now because we can use your time on the job.
They also went to trade school. Does that time count?
Yeah. We would need your hours to be consistent. So like if you're a 40-hour per week person and you've been there for quite a few months and then you had time in school, we can count the time in school as job experience, so to speak. So when we add up how long they were in school and how long
they're 10 months on the new job.
Yeah.
And then they also went to school before that. So
yeah, so you're between a year and 2 years of being in that field. So I would say, yeah, we've got a good basis. I would definitely, you would need to do the pre-approval application, which you can do online, and then we'll get the dates, we'll get the numbers. We would have to look at get the copy of the transcripts showing you were in school, and it has to show that you were going for this purpose, and then we can count that as continuance or part of time you're doing the job. But I would say with a combined school and work time over a year, you should be fine with that, as long as everything else looks good.
Here's someone who says, I had a foreclosure in 2016. Can I buy another house? And would I be considered a new home buyer, a first-time home buyer?
They had a foreclosure in 2016, so roughly 5 years ago. And so yes and no. A foreclosure is one of the ones that has a longer waiting period. For conventional loans, it's a 7-year waiting period after a foreclosure. But for FHA and VA and even USDA, it's a much shorter period. It can be anywhere from 2 to 4 years, depending on the exact circumstances of the foreclosure. Now, if it was a short sale, sometimes people will tell me that they had a foreclosure, but the bank ended up selling it, or they ended up selling it before it actually went all the way to foreclosure. That can be a shorter term. That can be like a 4-year term. And also signing the deed over to the bank, what they call a deed in lieu of foreclosure, can be a shorter term, like 4 years. So really need to look at the exact situation. Sometimes I'll go and look at what they count on is we go and look up the deed, and we go from the date it was transferred out of your name. So I've also seen sometimes where there was a deed in lieu or a foreclosure, but the actual deed didn't come out of their name till much later. I've seen it 2 or 3 years later before the deed transferred out of their name. We got to go by the date that it transferred out of your name. But it's easy to look up. It's on public records. You can go and see the exact date. But yeah, it sounds like, the second part of the question was, can they do first-time home buyer? Yeah.
Yeah. Would they be considered a first-time home buyer?
Yeah. So if you haven't had a home in the last 3 years, then you're eligible for the different first-time home buyer programs. 3 years is the mark for that. So very likely that you could get an FHA loan now, or a VA loan if you're qualified, and be a first-time home buyer. Great question. We're going to take a quick break. We'll be back in just a minute.
You're listening to Home Loans Radio on Real Radio. Now back to the show with that mortgage guy, Don.
You are listening to Home Loans Radio with that mortgage guy, Don. Lucky, where we talk about mortgages. It's so fun. Hey, Don.
Yeah,
Hey.
it's so much fun.
Fritz.
Hey, what's up, MJ?
Sometimes
It's a good time.
Sometimes I don't know if you're into it, MJ.
Oh, I am.
All right. Welcome back to the Home Loans Radio Show, folks. You're here and we're here. It is second weekend in September. Live show. You can text in your questions to 77031. Please do. I will answer them on air. You can also, anytime during the week, go to homeloansradio.com website. You can do a lot of things there. You can get a pre-approval. You can get a quote for a refinance. You can work on, being a first-time home buyer. I just read an article this week, came out yesterday or the day before, I think, about rents in Central Florida. Would you imagine, MJ, that rents have gone up since January or down in Central Florida?
It feels like they're always on a trajectory up.
Yeah, I'd say that's. How about you, Fritz? You think they're going up or down?
I would say there's a 1,000,000% chance they did not go down. So I would say go up, and I would say, do you have the new average?
I do, yeah.
Okay, I will say it's going to be $1,650.
Well, you're talking about the average dollar amount?
Yeah.
Right.
What would you say the percentage has gone up just since January? So we're in September. Just since January of 2021.
Well,
how much do you think it's gone
You go
up?
first, Fritz.
Last month it went up 20%, I think. So I'm going to say 22.
All right, I'm going to say 26.
You're both on target, but MJ gets the bell on this one. The average rates. Well, okay, I guess I gotta clarify. Well, you can have the bell, but I'm gonna clarify it a little bit.
I got an unearned bell. What does that do to my karma?
We'll call it a half bell. So Orlando area prices have gone up 20%.
Okay.
But some areas in Orlando area, Central Florida area, have gone up 30%.
Oh, my.
Some areas in Tampa, West Palm, greater, the middle of Florida have gone up as much as 32%. So it's kind of all over the place. The downtown Orlando area has gone up 12.9% since January in rents. And that, if that sounds high, that's because it is. Because prior to that, the highest it's ever gone up in a year, it was 2006, where it went up 7% in 1 year.
Wow. So from 7%.
Yeah. So in Orlando, downtown Orlando area, it went up 12.9% so far this year. Osceola County as a whole is up 14%. It keeps going, different parts of Orlando, different parts of Florida are up more and more. The number one increase is in Lake Nona.
Oh yeah, Lake Nona's
since January. Lake Nona's a golf community, fancy community. And how much would you think rents have gone up in Lake Nona in the last 8 months?
I bet it's a lot.
It is,
because I was just reading about Lake Nona, and they're one of the fastest growing areas in Central Florida.
Yeah, they've got the huge medical centers that are being built out there. They've got a lot going on.
Well, they have a lot of planned communities, and their claim to fame is that a lot of those communities are planned in a very tech way and a very green way.
Yeah,
and people like it. Plus, they have those driverless cars and all the crazy stuff that they have in Lake Nona.
That's the only place I've ever seen a self-driven car. Was in Lake Nona.
Yeah, and people like it. And their people are buying houses as fast as they can build them there.
That's crazy. 30% is the amount that rents have gone up there. So the average rent in Florida right now for a 1-bedroom apartment is up to around $1,700 a month.
Wow.
That's amazing.
Yeah,
I mean,
that's a lot of house.
Well, they've got like a medical city over there too, don't they?
Yeah,
they do.
Yeah, and there are good paying jobs in that area, but they're
if you're a doctor.
Yeah, right. Yeah, but that's a lot. 30%. The previous record ever as far as record keeping was 7% in 2006. So more reasons to buy a home, more reasons to find out about getting pre-approved.
1,700 is it's a lot of house to buy.
You can most likely buy a house of around $225,000, $250,000. That's not a mansion. That's your entry starter level house. And they do exist for sure. We do loans all the time in that price range. But you can do that and have a house for the same as what a 1-bedroom, apartment might cost. That's why so many people are getting pre-approved. That's why there's so many qualified buyers. If you want to find out if you're ready, or you want to start getting ready, or you want to make a plan to be ready next year, hit us up at homeloansradio.com. That's what we do. I help lots and lots of first-time home buyers. We love it. I like working with first-time home buyers. For me, it's one of the most rewarding parts of the business. So,
of course.
And you were saying that the inventory is coming around a little bit.
I've seen some signs.
So if you've heard those stories, if there's no inventory.
Yeah, well, for over a year and a half, there's been lower inventory, and it's still low, but the numbers are starting to come up from reports that I'm getting from people that I work with, realtors that I work with, clients that are out there shopping around. There's still competition for the listings when they come up. They're still selling quickly, but it seems like there's a little less competition happening right now, a little more inventory coming up. That's a normal ebb and flow that happens, seasonally. The purchase business usually slows down after the summer as we start to head into fall. So that's not unusual. But you can text in your questions here to 77031 or comments, or just tell us what you're doing.
Yeah, we'd like to hear what you're doing. All right. So here's someone who I was told I can't refi because I was furloughed for a year in 2020 and was getting unemployment that year. I work now and have excellent credit and no debt. Why can't I refinance?
Well, if you had a forbearance, through your servicer, and because of COVID, you could get a delay. You could basically not pay your payments. If you're back to making those payments and you're back to working full time in a field, that you've had, that you were working in, once you've made 3 months of payments, you should be eligible to refinance. However, if you didn't do the official forbearance, or if you just missed payments or something like that,
they were furloughed.
Yeah.
I'm sorry.
Yeah. Yes. Furloughed. That means, either your hours were cut back. There's different types of furloughs. Some furloughs, if instead of working Monday through Friday, they would just have you work Monday through Thursday. You'd lose a few hours. Or if you're a salary, they might pay you for 30 hours instead of 40. Or you might have just been off. They might have just sent you home for several months. They're saying they were furloughed in some form for a year. But if you're back to work at that job, or the job doing the same thing, and the key is you have to have started making your mortgage payments again. So you have to have worked out that forbearance agreement with your lender, and moved all those payments to the back of the loan and started afresh making your payments. Once you've made 3, then you're in a position where you can look at doing a refinance. If you want to talk to me more about that, hit me up offline at